Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a series that aims to focus on the trend lines rather than just the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Welcome to the March edition of the Trending Report, brought to you by USA Financial. I'm Tyler Krzciok, and it's officially March. For sports fans, that means madness, brackets, upsets, and the search for a Cinderella story. For investors, March can feel pretty similar. We're closing out the first quarter of 2026. Volatility often spikes as institutes rebalance their books, and the media headlines get louder about who's winning and who's losing the year so far. In this episode, we're going to look at the trend lines that closing out February, discuss why your portfolio might need some spring cleaning, and explain why boring brackets beat buzzer beaters every time. We're now into the third month of the year. Back in January, we talked about the big themes: AI infrastructure, utilities, continued shift in interest rates. In February, we talked about emotions, the fear of missing out, that it tempts us to chase whatever is new. Now, the data is starting to accumulate, and we're seeing a classic separation in the market. The speculative trades are cooling off, and the quality trades are stepping up. If January was about promises and February was about feelings, then March is going to be about the proof. The market is starting to vote on which companies are actually delivering on those 2026 expectations. This brings us to a concept that fits the season: spring cleaning. In the investment world, we call that rebalancing. Let's be honest. Rebalancing is counterintuitive. It's human nature to want to let your winners run forever and to cut your losers immediately. But a disciplined, formulaic approach often demands the opposite. It forces you to trim the areas of your portfolio that have grown too big and too risky and redeploy that capital into areas that are undervalued. It feels uncomfortable to sell those assets that are doing the best, but that's exactly what you have to do to manage risk. You're essentially taking chips off the table after a winning streak. If you haven't looked at your assets since New Year's, March is the time to see if those percentages have drifted off course. Since it's March, a March Madness analogy fits pretty well. Think of formulaic investing like filling out a tournament bracket. When you fill out a bracket, you're making decisions before the game starts. You have a good framework, and you have logic. If you tried to fill out your bracket during the game, you'd be an emotional wreck. You'd switch your pick every time a team hits a three-pointer or turn the ball over. Unfortunately, that's how most people invest. They react to every single highlight reel they see on CNBC. So, as we finish up the first quarter of the year, here's the trend line to watch: rotation. We're seeing money move from the high-flying momentum stocks into a broader, more defensive areas of the market. This is healthy. It means that the rally is widening out. Don't be afraid of that rotation. Embrace it. To wrap things up, the Madness of March is fun to watch on TV, but it's not a strategy for your life savings. Stick to the trend lines. Ignore the headlines and let the formula be your guide. Thanks for watching the Trending Report. I'm Tyler Krzciok, and let's finish out Q1 strong.
Thanks again for listening to this episode of the Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.